Welcome Evercrest Capital, your trusted guide to mastering money, markets, and long-term wealth. Whether you're a curious beginner or a seasoned investor, we break down complex financial concepts into simple, actionable insights. From the best dividend stocks, explosive growth opportunities, to deep dives into market trends, we got everything you need to invest smarter and build lasting wealth. So hit that subscribe button, turn on notifications, and join the movement of financially fearless investors. This is Evercrest Capital, where your money works for you. Are you aiming to build a consistent monthly passive income stream through dividend investing in the U.S. stock market? In this video, we delve into the top 5 dividend-paying stocks that can help you achieve financial stability and growth in 2025. Each stock is analyzed in-depth, covering company overview, market capitalization, current stock price, dividend yield, 3-year stock performance, dividend history and stability, future outlook. Johnson & Johnson, J&J. When it comes to long-term dividend investing, few names are as trusted as Johnson & Johnson. With a massive market cap of around $394 billion and a history dating back to 1886, J&J has become synonymous with stability in the healthcare space. Their stock currently trades near $165, and with a dividend yield of 2.8%, it's an ideal fit for investors looking for a balance of income and capital appreciation. What sets J&J apart is its 60-plus consecutive years of dividend increases, earning it the coveted dividend king status. That consistency is backed by diversified operations across 3 major segments: pharmaceuticals, medical devices, and consumer health. In 2023, they spun off their consumer health segment into a new company called Kenvue, allowing J&J to focus more heavily on high-growth areas like immunology and oncology. Over the last 3 years, Johnson & Johnson has demonstrated resilience, even during periods of market volatility. While it's not a stock that skyrockets overnight, its slow and steady growth is perfect for risk-averse, income-oriented investors. Looking ahead, Johnson & Johnson's pharmaceutical pipeline includes several promising drugs in late-stage trials, and their continued investment in medical technology puts them in a strong position to grow earnings and dividends in 2025 and beyond. 2. Procter & Gamble Company, PG. Next, we have Procter & Gamble, a household name in every sense of the word. This consumer goods giant has a market capitalization of $370 billion and trades around $157 per share. Its dividend yield of 2.5% may not be the highest, but what it lacks in yield, it makes up for in reliability and longevity. P&G has increased its dividend for 67 straight years, making it one of the most dependable income stocks in the USA. They manufacture products across 10 major categories, including beauty, grooming, healthcare, and home care, with iconic brands like Tide, Gillette, Pampers, and Oral-B. Over the past 3 years, P&G has delivered steady stock performance, even in turbulent economic times. That's due to its ability to pass on higher costs to consumers thanks to its powerful brand equity. What's important for 2025 is P&G's commitment to innovation. They're using AI and automation to streamline operations and boost margins. At the same time, their sustainability efforts are resonating with environmentally conscious consumers, especially in the U.S. For dividend investors, Procter & Gamble is the definition of a sleep-well-at-night stock. It won't make you rich overnight, but its predictable income stream is ideal for building long-term wealth. 3. Coca-Cola Co. At number 3 is Coca-Cola, the beverage titan with one of the most iconic brand portfolios on earth. With a market cap of $300 billion and a current stock price near $70, Coca-Cola offers a dividend yield of nearly 3% and a staggering 60-plus years of dividend growth. Coca-Cola has historically been seen as a safe haven during uncertain times. Why? Because people don't stop drinking Coke or its 200-plus other products, even during a recession. In fact, its revenue grew consistently even during COVID-19, proving its ability to weather storms. Over the past 3 years, KO's stock has been relatively stable, offering a haven for conservative investors. In recent years, they've smartly diversified beyond sugary drinks. Their acquisitions of brands like Costa Coffee and expansion into low-sugar and functional beverages show they're adapting to new consumer trends. The company is also innovating with AI and data to optimize distribution, pricing, and customer engagement. That's critical in keeping margins high and dividends flowing. For 2025, Coca-Cola's international growth, strong brand loyalty, and predictable cash flow make it a prime choice for monthly passive income seekers. For Pfizer Incorporated, PFE. Coming in at number 4 is Pfizer, one of the world's most well-known pharmaceutical companies. Currently valued at about $150 billion, the stock trades near $22, making it an affordable option for investors. But the biggest draw? A high dividend yield of around 4.2%. Over the past 3 years, Pfizer experienced volatility, peaking during the pandemic due to vaccine sales, and then correcting afterward. However, this pullback has opened up a long-term opportunity. Despite challenges, Pfizer has remained committed to shareholders by maintaining, and even increasing, its dividend. Pfizer is pouring billions into R&D, with a pipeline focused on oncology, rare diseases, and gene therapy. Additionally, they've made smart acquisitions like Seagen to bolster their cancer drug portfolio, a move analysts say could drive significant growth in the next few years. Investors often overlook Pfizer due to recent underperformance, but its fundamentals remain strong. A solid balance sheet, massive global distribution network, and long-term demand for medications all position Pfizer as a high-yield dividend stock worth watching in 2025. Last but not least is AT&T, a telecom veteran making a comeback, trading around $19 per share. With a market cap of about $135 billion, AT&T offers one of the highest yields on the list at 5.78%. Now, let's address the elephant in the room, AT&T's past missteps, especially its overreach into media with Warner Media. But the good news is they've learned. In 2022, they spun off Warner Media and doubled down on their core business, wireless and broadband. That's helped them reduce debt and focus on long-term profitability. Over the past 3 years, AT&T stock performance has been rocky, but its high dividend and renewed business focus are turning heads. They're aggressively expanding their 5G and fiber optic network, which will be key growth drivers as the demand for fast, reliable internet explodes in the U.S. In short, AT&T is a turnaround story with strong dividend potential. For income investors who can stomach a bit more risk, it's one of the few large-cap U.S. stocks still paying close to a 6% dividend yield, a rare find in 2025. Let's go and see an overview of top 5 dividend stocks for monthly passive income in the USA 2025. These 5 hand-picked U.S. dividend stocks offer the perfect blend of consistency, income, and long-term growth potential, making them ideal for investors looking to build a reliable stream of monthly passive income in 2025. 1. Johnson & Johnson, J&J, a dividend king in the healthcare sector with over 60 years of consistent dividend hikes. Backed by a strong pharmaceutical pipeline and medical device innovation, it's a low-risk stock for income-focused investors. 2. Procter Gamble, PG. With 67 consecutive years of dividend growth, P&G dominates the consumer goods space. Its household brand power, operational efficiency, and steady demand make it a cornerstone of any long-term dividend portfolio. 3. Coca-Cola Co, one of the most iconic U.S. brands. Coca-Cola offers recession-resistant cash flow and 60-plus years of dividend increases. Its strategic diversification into healthier and functional beverages boosts future growth potential. 4. Pfizer, PFE. While its post-COVID valuation has corrected, Pfizer remains a biotech heavyweight with a deep drug pipeline and strong dividend yield. It's a high-yield pick with long-term upside tied to innovation in cancer and gene therapies. 5. AT&T, a high-yield telecom stock with a dividend nearing 6%. AT&T is focusing on core wireless and broadband growth after shedding non-core media assets. It's a value opportunity for income investors comfortable with moderate risk. Thanks for watching today's breakdown on the best dividend stocks for monthly passive income in the USA. Money with wings. If you found value in this video, don't forget to hit that like button, subscribe to Evercrest Capital, and tap the bell so you never miss out on high-impact stock market insights every week. We drop 3 to 4 videos weekly, covering the best U.S. stocks, dividend plays, and long-term investing strategies to help you build real wealth, not just hype. Speech balloon, drop a comment below. Which stock from today's list are you most bullish on? Or is there one you think we missed?